Hi guys, in this video I'm going to cover the content of BTEC Level 3, Unit 3, Statement of Financial Position, which is part of Business Finance. What is a statement of financial position? A statement of financial position shows a business's net worth at a particular period of time. This is also shown at the end of a financial year. It shows the assets of the business, so everything that they own, and the liabilities, so what they owe. It shows the value of a business and is also known as the balance sheet. How a statement of financial position is presented. You will have the non-current assets, which will be split into intangible assets and tangible assets, plus the current assets minus the current liabilities, and that gives non-current assets or liabilities. Then that minus the non-current liabilities, that will give us the net assets. This is the first half of the balance sheet and it calculates the business's net assets, so the worth of the business. What are non-current assets? Non-current assets are items that a business owns and it can stay in the business for a long period of time. There are tangible assets, so things that can be touched, for example, a machine, and there are intangible assets, things that cannot be touched, for example, trademark. What is an intangible asset? An intangible asset is something that will add value to the business. However, it does not have a physical presence. For example, goodwill, which means that when an individual buys an established business, they are also buying the customer base and the brand recognition. The value of the intangible asset can change over time. What is a current asset? A current asset is items that are owned by the business, which value will change on a regular basis. So whenever the business will make a transaction, the value of the asset will change. Some current assets are inventory, trade receivable, prepayments, cash in the bank, and cash in hand. What are inventories? Inventory is the value of the stock at that moment in time. There are 3 different types of inventories that a business can have: raw materials, work in progress, and finished goods. The business must give stock a realistic value. What are trade receivables? Trade receivables are those people that owe the business money. Even if the business still might not have received the money, it still belongs to the business. Trade receivables will be customers or businesses that owe the business money, and it can help the business track them down. What are current liabilities? A current liability is something that the business owes, and they need to pay it back in under 1 year. For example, overdrafts, accruals, and trade payables. Trade payables are businesses or people the business owes monies to because they have not paid for a good or service that they have received. Net current assets or liabilities. Net current assets is very important for a business to know. It allows them to know if they can meet short-term debts. If a business does not have enough current assets to meet their current liabilities, it will cause major issues for the business as they will have to get money from elsewhere. Net current assets is calculated as current assets minus current liabilities. If the current assets are greater than the current liabilities, it is known as net current assets. If the current liabilities are greater than the current assets, it's known as net current liabilities. Non-current liabilities. A liability is something that the business owes. And if the liability is non-current, it will mean that the business will have to pay it back more than a year, for example, a mortgage. Net assets. Net assets is the figure that represents the total value of all assets the business owns minus the total value of the business's liabilities. Net assets is calculated by non-current assets plus the current assets minus current liabilities plus non-current liabilities. Capital. The second half of the balance sheet shows the capital employed. Capital employed is the total amount of capital that is tied up in the business at a specific point in time. Capital employed is calculated as the owner's or shareholder's capital plus retained profit - the drawings. What is opening capital? Operating capital is money that is invested into the business from the owners. It is money that the business has at the start of trading. The owners can be sole traders, partners, or shareholders. What is retained profit? Retained profit is a profit that the business has kept from the previous year plus the net profit from the current year. And what are drawings? Drawings is the money the owners have withdrawn from the business. For the statement of financial position to be balanced, the net assets must balance the capital employed. What are the uses of the statement of financial position? Comparisons can be made within the figures of the balance sheet. It can be used to make comparisons between years. It can be used to compare different departments of the business, and it can be used to compare between businesses. You can now pause the video and have a go at these practice questions. If you like the video, then give it a like. If you'd like to see more videos like this, then subscribe. And if you would like to see more updates on resources and videos, follow my Instagram. And if you would like to have resources to this video, you can check out my test shot.